Pocket option trading strategy for real profit revolves around a disciplined, structured approach that blends technical analysis, risk management, and trader psychology into one cohesive system, ensuring consistency rather than relying on luck or impulsive trades. To start, a successful strategy begins with selecting the right market conditions, avoiding choppy or low-volume sessions, and focusing instead on high liquidity periods when price action is cleaner and more predictable. Traders often use proven indicators such as the Relative Strength Index, RSI, to measure overbought or oversold conditions, coupled with moving averages like the EMA 9 and EMA 21 to identify short-term and medium-term trend directions, and confirmation tools like MACD or Bollinger Bands to validate entries. For example, a high-probability setup might involve waiting for the EMA 9 to cross above the EMA 21 during an uptrend, while the RSI remains between 50 and 70, signaling bullish momentum without being overextended. On pocket option, trade timing is critical, selecting expiration times that match the strategy's timeframe, such as 1 to 5 minutes for scalping or 15 minutes and above for swing setups, ensures that trades align with market movement rather than random fluctuations. Equally important is capital preservation. Risking only 2 to 5% of total account equity per trade safeguards against large drawdowns, while using stop-loss mental limits and avoiding overtrading prevents emotional decision-making. Another key factor in making real profit is trade filtering. Trading only during high-impact news events if using a news-driven strategy, or completely avoiding them if relying on technical analysis alone, as volatility can invalidate signals. Consistency also comes from recording each trade in a journal, noting entry criteria, market conditions, and emotional state, which allows traders to refine their pocket option strategy over time by spotting patterns in winning and losing trades. Additionally, understanding candlestick behavior, such as rejection wicks near support and resistance zones, engulfing patterns, or pin bars, adds another layer of precision to entries. Real profit in pocket option doesn't come from taking every signal. It comes from exercising patience, waiting for confluence, and executing only when multiple conditions align. By combining a clear technical framework with disciplined money management and the patience to wait for high-quality setups, traders can minimize losses and allow winning trades to compound over time. Over the long run, this structured approach transforms pocket option trading from a risky gamble into a repeatable profit-generating activity, where each decision is backed by analysis, every risk is calculated, and every trade is part of a larger, data-driven plan rather than an isolated bet.